stock skyrockets, and Japan Nikkei goes to 30+ year highs. Dollar still is pressuring gold and silver. I don't think the correction is done in precious metals, and oil could keep bouncing towards $85 mark. This and other news in today's edition of MasterChartsTrading.com market recap for Friday, May 26, 2023. My name is Alexander. Don't forget to hit the like button, subscribe to this channel, and share this video with others. On this chart, as always, I'm using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart as green, blue, red, and yellow line. You can find out more about them by going to the description of the video. The way I use the indicators is as follows. When a stock closes above the blue support resistance line, as it did for this security, this is S&P 500, it closed above the blue line where I'm hovering on Thursday the 13th of April, right there. So this was the signal for us to say that stocks are no longer in a downtrend, they're now in an uptrend. We should start buying them or start thinking about buying various stocks and ETFs. So right this instant, we're looking at a new closing high. So closing means that the stocks closed the session today and actually weekly as well at the highest level. We closed higher than the previous close, which occurred on the 18th of May. We closed higher today, so this is the highest close for S&P 500 since the lows that were made back in October of last year, 2022. This is obviously good news because I think stocks could continue higher significantly. As I already pointed out, we could see a very major move higher when or if we get to the all-time highs. However, before that happens, we need to overcome August 2022 highs. I'm hovering over them right now. This is August 16, 2022. S&P 500 made a high there, so I drew this white line across to show you where that level is. That level is currently 2.78% away, or 116 points away. So that level is at 4,322 or so. So for stocks, it's not a lot. I mean, today we moved about 1.5%, 1.3%. So that could be, 1 to 2 days of, strong price appreciation. At that point, we will start making 52-week highs. So 52-week highs are, in my book, always considered as a bullish sign, as a good thing. When a stock makes a 52-week high or an all-time high, it means that people want it. People want to own the stock. People want to, continue buying it. It is not an indication that we will get a pullback. I mean, it's possible to get a pullback, but overall, when a stock hits new highs, it's generally speaking considered a bullish behavior or a positive sign. So I am pretty optimistic about things, the way things are going. And if we look again, I'm going to look at this chart on the weekly chart. This is a S&P 500, but now on the weekly. So each candlestick is a week's worth of activity. Before here, we were looking at each candlestick as a 1 day's worth of activity, not just 1 day. So looking at this chart on a weekly chart, weekly time frame, meaning that each candlestick is a whole week's worth of activity, we can kind of zoom out a bit, and this is the pandemic low in 2020. Seems like ages away, but I still remember it quite clearly. It was very scary if you don't remember that, but yes, pandemic was pretty bad. However, we did make a low in March of 2020, and then continued this huge run. We made this enormous run that finally culminated in January of 2022, right before the invasion of Ukraine by fascist Russia. Now, so looking at this chart, I drew in this pattern. So we have a move up, a huge, really just tremendous move up from the pandemic lows towards the invasion highs. And then the entire 2022 was spent, basically pulling back. So I drew in this cup formation that is obviously not complete because we haven't even gotten to the lip of the cup. The lip of the cup is way up here at 47 or almost 4,800. We're currently at 4,200. So we still have ways to go. We have about 13% to run until we get to the record highs. 13% is not that much for stocks. Stocks can move that much quite fast. So, as this I already showed in the past, if we do make it to the record highs, we will have what's called a cup and possibly a handle pattern, because we could break out and just kind of trade sideways for a little while. So that'll be a handle. We could pull back a little bit. That could also be a handle kind of. So the cup and handle kind of pattern. So if we get to the highs, we will get to this. We will create this what's called a cup and handle pattern. Depth of this pattern is from the October 2022 lows until the January 2022 highs. So about 37%. Now we can, or about 1,300 points or so. So again, I already showed this chart. If we do break out into new record highs, it is very reasonable to estimate a move higher of about 1,000 points. So we're looking at S&P 500 of around 6,000 sometime in the future. I don't know when, but the way I drew it in, it looks like we're going to be there in about a year. Can this happen? Absolutely. The reason being is because we're already seeing something similar in Japanese stocks. So here's Nikkei, NKY symbol on TradingView.com. We can look at it on the weekly chart as well. Here's Nikkei, or Japanese stock market index, just hit it's not an all-time record high, it's a 30-plus year high, because apparently Nikkei has hit that high 30 some years ago. So very similar to what I just described. We have a move up from the pandemic lows. We have a depth of this pattern, which is around 25%. We just made this new record highs, all 30-plus year highs. So we have completed this pattern. Okay, so we are now, the road is now open towards new records, and the new records could be estimated as the depth of this pattern. Okay, depth of this pattern is defined by highs from February 2021, lows of March 2022, and now a new 30-plus year high that just happened a couple of last week basically. So yes, we could see a little bit of a pullback, sideways trading, but the gist of this pattern is we are most likely going higher. So this is a Japanese stock market, maybe something like this. So we're looking at sometime in 2024, possibly earlier. We don't know. I mean, we don't know when it's going to happen, but we're looking at another 6,000 point move, or about 25% move for Nikkei, and the similar pattern that I just described for S&P 500. Going back to our domestic United States markets, here is NASDAQ. So NASDAQ 100 E-mini futures. I'm looking at this chart. So this pattern that I'm tracing out, this white dotted line, white solid line, and then another white dotted line. I put it in, I drew it in sometime in March. So I was expecting for new highs to be made, well, new highs for the move to be made, and indeed they were made where I'm hovering on in late March, and this completed this pattern. So we have a very similar pattern what I just described. We have a move up, a pullback, and now a breakout. Okay, so we have this, it's a very similar pattern, so it's sort of like this cup and handle continuation pattern. I actually got quite a bit of flack for this, but we are literally there. So this pattern is basically being completed right now as NASDAQ is surging on the heels of blockbuster results by Nvidia. Why that's happening, that's not my primary thing. I usually just look at technical picture, and technical picture in this case is just it was perfectly described. So we're looking at this move up, somewhat of a trading sideways to down, and then another move up. So this is a very kind of classical pattern. Additionally, looking at this pattern, at this NASDAQ, this is NASDAQ 100. So here are the highs from August 2022. All right, so these are now whatever we hit 52-week highs where I'm hovering right there last week, Thursday the 18th of May. And as I said last week, new highs, new 52-week highs breed or lead to new 52-week highs. We are having that pattern right now, so we're hitting new 52-week highs. How long is it going to continue? Anybody's guess. This is a somewhat overextended pattern. I mean, I can see there's a very large candlestick today. Today we moved 2.5%. It does not mean that we will immediately pull back. Okay, this is a 52-week high. 52-week highs, people say, oh wow, it's hitting 52-week highs, maybe I should buy some. All right. Looking at the weekly chart for NASDAQ, we can look at NASDAQ on weekly chart. So there it is. We're not far off from record highs. Okay, so this is a today's close, and record closes are right there. In November 2021 or January 2022, early, right before the Russian invasion of Ukraine. It's 17% away. Okay, so this is not very far from the lows that happened in October 2022 until now. We moved 37%. All right, so we moved that much in less than a year, 225 days, or 32 weeks. All right. Can we move that much again in till the end of the year? Sure. And we're approaching all-time records. So all-time records will most likely lead to more all-time records. Okay. Coincidentally, I own QQQ. I was already questioning the entire bearish narrative back in October. Again, if you're my subscriber, then you will have noticed that I was already very unsure about this whole bearish narrative, and I was already saying that something is brewing, and I was like, okay, you know what, the risk is very low. So I bought in January of this year, on January 20th, risk was super low. Risk was that. The risk was new lows. So I figured, okay, it's at 8% risk, but the reward could be huge. Yeah, and I actually went ahead and I bought actual QQQ, the stock, at $280.26. Currently we're up 24%. I'm still holding full position. I'm not sure I want to sell it at this point. I mean, we're at 52-week highs, so more 52-week highs might follow. So I'm reluctant to sell at this point. And like I said, we're not that far off from all-time record highs. We're like 15 to 20% away from 15. What did I just say? 17% away from record highs. So I would, basically at this point I'm keeping the position and I'm going to see what happens. Now, of course, you may have heard about this week's blockbuster announcement by Nvidia. They beat expectations by 18%. Okay, so in this world, this is a big deal. All right, and somehow, I don't follow those earnings announcements, and you can see on this chart that we were long Nvidia. This is an actual alert. I sent it out right there on February 15th of this year. Why did I send it out? I didn't know anything about anything. Okay, so this is the picture that presented to me at that time. So Nvidia at that time, you know, this is a 52-week lows in October of last year, and I wasn't really paying attention. However, I started paying attention when we broke out about the blue support resistance line right there. Indeed, the alert was sent out right there, 15th of February. And again, if you got in, I mean, this is just a enormous gain, 72%. If you bought options, you could easily triple, maybe more than 72%. I mean, 72%, 3 times that easily. So if you got in back in February, you know, big congratulations. And what do you guys think at this point? Do you think Nvidia will pull back? I mean, we do have a very large gap. Look at the size of this gap between the 24th of May and the 25th of May. It's a really large gap. Okay, will it pull back? I don't know. Make a comment. What do you think? Will this gap be filled? As they say, all gaps are filled, but some gaps are never filled. So maybe. All right, let's move on. Very briefly, I want to touch upon high yield bonds or junk debt. So junk debt correlates highly to S&P 500. I'm going to show it to you on the weekly chart. So correlation is not causation. However, correlations are good to know. So if one is going up, this is JNK, junk debt, correlating down below here on to S&P 500. This is a correlation coefficient. It's free. Generally speaking, you can see it correlates highly. So when S&P 500, for example, is going up, the high yield bonds are also going up. Vice versa, when the S&P 500 is going down, the junk debt is also going down. Currently, it's correlating at pretty decent coefficient of about 67%. You can see that the junk debt is kind of dragging its feet, and I was actually quite scared right there Wednesday, 24th of May and 25th of May. I was kind of worried that we're breaking down. However, today we did rally. Ideally, again, we should significantly move higher. Significantly, ideally, this is a February high right there. Ideally, we should break above the February high. S&P 500 already broke above the February high. There it is. There's a February high. So we're already above it. High yield bonds have not. So you can kind of see they're kind of dragging their feet. So ideally, we should see a breakout for high yield bonds, hopefully very, very soon. And then I won't worry as much. But right this instant, high yield bonds are still dragging its feet. So pullback obviously cannot be ruled out for stocks. All right, switching gears. This is dollar currency index, DXY. Dollar currency index is currently in a downtrend. Downtrend began where I'm hovering Thursday, January 12th of this year, 2023. Before that, the dollar index was in an uptrend. It began its uptrend back in 2021, in July 2021, or even earlier, in July 2021, and it had a very large run until finally we turned around and started making lower lows and lower highs. Right this instant, we are making a bounce. So I drew in this dotted blue arrow back on 3rd of May. We're kind of following it more or less. I think we will continue to bounce. So we're almost at the level of where I would say that yes, we're now overbought. All right. Okay, this is a very important concept, so please listen up. We are overbought and within a bigger downtrend. All right. So downtrend, it took me a very long time to understand this. A downtrend for a stock, and we're overbought. We're overextended in the opposite direction of a primary trend. So we're getting very close to that level. So once we get to this red line, I would say yes, we're definitely overbought, and we should definitely short this index. We cannot trade this in the United States. I mean, there is UUP, you can trade UUP, so it's not ideal, and notice it doesn't really track. So if you're gonna trade a dollar index, use DXY to see where it's going. So we're almost there. I'm looking at this chart, and if we continue a little bit higher, then we're about to get long on gold again. So why gold? Here we go. Gold is traded in this country in dollars, so it's XAU divided by USD. Currently, USD, the lower part of this equation, is pulling this currency pair lower because it's getting bigger. Like I said, it's getting more expensive. Like in the previous chart, I said the dollar is getting more expensive. XAU divided by USD is moving lower. I drew in this downward facing arrow, or the dotted arrow back in April of this year. I thought that we were overextended to the upside when we continued lower. We're almost there once again. So for gold, we need to think opposite. We are in an uptrend. Okay, uptrend began where I'm hovering on January 13th by closing above this blue line. That's all I needed to know. Okay, so we're in an uptrend and we're oversold. All right, when we're oversold, while we're in an uptrend, we want to start thinking about buying it. So we're almost there. We're about 2.5% away from those oversold levels. Since we're in an uptrend, we want to be thinking about buying it. So gold, almost there. Silver is already there. All right, so this is silver XAG divided by USD. Once again, dollar is getting, pulling this currency pair lower. You can see I put in this dotted arrow back in April. We have made that low. We have made the low at the blue line. So right now we actually have a signal. We have a signal to buy. Okay. I did not yet send this alert out. Reason being is because I think I want to look at gold. Silver, I mean, it's important, but it tends to overreact. So I think we're looking at gold to continue lower a little bit more, and then stop somewhere around basically 1900. My blue line is at 1897. Excuse me, at 1897. Silver is already there. Silver is at 22 right now, 22, 23 right now. I think we will see something like this. I'm gonna just draw it in. I think we'll see something like that, and then we will start going back up. So I think the bottom will come sometime in June for precious metals before moving higher. So let's see what happens. I think again, once again, I think we're very close to the bottom for precious metals, and we will again start thinking about buying them. And here's GDX. I wanted to just show you what happened to GDX, the gold miners ETF. So alert. This is an actual alert that was sent right there on 4th of April. But notice that the indicators curved down at this point, and usually the indicators, when they curve down like this, the price action follows. It did. So we are right now for sure oversold, yet we're within a bigger uptrend. So gold miners, gold, silver oversold within a bigger uptrend. But we need to wait for dollar to top and for gold to bottom. So we're almost there. Stay tuned. And if you're not yet a subscriber, sign up. And let's finish up with oil, CL1 exclamation point. This is light crude oil, United States mark. So it's in a downtrend for sure. Downtrend for oil began back in August of last year. We were selling it short. It made a low right there on the 20th of March of this year, 2023. Bounced yet and made another low on May 4th right there. So this is a hammer candlestick where I'm going to show it to you in all its grace. There it is. There's the hammer candlestick that occurred on 4th of May 2023. Why is it a hammer? Because it looks like one. It has a green body at the top of the actual candlestick. It has a long shadow at the bottom, a short shadow at the top. It's a hammer candlestick. You can say it's a doji hammer, maybe. It moved higher, it's sort of traded sideways. I think it's still not done. So I wouldn't do anything to it right this instant. Some people could potentially buy here for a move higher towards the red line. Red line is at around $86, $85. We're currently at 73. So I think we will continue to move higher for oil into June, and most likely at that point we will need to decide, do we want to sell it short again? We will see the price action. We need to see a tap-in pattern. So for example, here's a good way to look at tap-in pattern. So oil made a low here in September of last year, 2022, rallied and then closed below the red line. That's a tap-in pattern to me. Again, kind of made a low and then rallied again and then made a close below the red line. So all we need to know is when will it make a high above the red line and then close again below the red line, and at that point we want to sell it short. It hasn't yet occurred, so we need to wait and see a little bit until we get to that point. Thank you for staying with me and listening to the end. Again, please don't forget to hit the like button, subscribe to this channel, share this video, make a comment, make a question. And if you're ready to sign up, head over to MasterChartsTrading.com, click on sign up for one of the products. I have 2 products and 2 packages. So the best deal, of course, is to get both trading indicators and newsletters. So trading indicators are these lines on the chart. You can trade pretty much anything under the sun on most time frames. And also I send out a daily newsletter where I send out various alerts about stocks, ETFs, various speculative stocks, etc. And then weekly there is also a separate video. So for example, this week we will cover quite a lot of various securities. You can see that we're going to cover some of the, for example, natural gas will be covered in the members only section, Bitcoin, some of the international stocks, Amazon, IBM, and quite a bit of various what I call speculative stocks, like for example Baidu, Confluent, Cipher Mining, IonQ, big win by the way, new stock that we're looking at, Happyon Pharma, CrowdStrike, CleanSpark, Sana Biotech, Redfin, etc., as well as some of the gold ones that we're going to cover as well. So if you're ready to sign up, head over to MasterChartsTrading.com, sign up for one of the products, and I will send you all the information you need to get started. Again, thank you again for watching, and have another great trading week. Bye-bye.